Hello and welcome back to the course. In this video, I'm going to take a look at the US dollar as a risk barometer. The US dollar is a very interesting currency because it is the world's reserve currency. It serves several different functions. There are times when the US dollar strengthens and it's bad for risk appetite. Now, the reason for that is the most liquid and deep marketplace in the world is the treasury markets in America. Remember, the people who move the markets quite often are moving billions of dollars worth of capital at a time. And quite frankly, there's very few places that can be absorbed into easily, except for maybe the treasury markets in the U.S. There are a couple other bond markets here and there, but government debt in America can swallow up $50 billion pretty quickly. So what does that mean? That means that you need to buy U.S. dollars to buy U.S. bonds, obviously. So a strengthening U.S. dollar can quite often mean that there's a lot of fear out there. It doesn't always have to be the case. Sometimes it can be based on structural integrity of the U.S. versus the EU, and perhaps people are buying stocks in America because a good jobs report, something like that. But most of the time, there is a negative correlation between risk appetite and the greenback. On this chart, I have the S&P 500 in red, CFD market, and I have the dollar index, a basket of currencies that the dollar is measured again, gives you a general idea of how it's doing around the world. And that's in blue. And you can see that there is an area where we crossed through and diverged quite strongly. As the U.S. dollar fell, exports from the S&P 500 companies should continue to rise due to foreigners being able to buy these cheap goods. A weaker U.S. dollar typically is good for risk appetite around the world. Not only that, think of it this way. Commodities are priced in U.S. dollars. So if it's cheaper to buy oil or rice or palm oil or any of the other markets, then it becomes cheaper for the rest of the world and it stimulates more economic growth. So pay attention to the US dollar index. It can give you an idea not only how to trade the dollar, but perhaps looking into other stock indices around the world.